Good morning, everyone. This is Windsor Brokers live daily market outlook for Wednesday, 19th of December 2012. As we can see in our charts, overall positive sentiment for the currencies opposite US dollar continues as Euro hits fresh highs, followed by British pound. Dollar yen is back to strength, while gold dips to the fresh 4 months low on yesterday's technical selling, and the US dollar remains under pressure. The euro is extending its nearly 10 days rally and climbed to its strongest level against the dollar since 1st of May on today's rally, with the market's positive sentiment established and being encouraged by signs of progress in the US fiscal cliff and negotiations, lifting risk sentiment and basically bringing risk on mode into the markets. As said, some positive movements are seen in the current negotiations between the Republicans and the Democrats in America. That is basically the highlight of the near-term market actions. This is basically the most important thing, as the failure to find any solution would of course be have quite dramatical consequences. This would keep bring basically United States back into the recession, with the single currency hitting a fresh high at 132.53, heading towards next target at 133.00, with some technical corrective action seen underway, while sterling sustained its gains above 162, breaking above yesterday's high at 162.68, hitting 162.76 so far. This is this morning's high, approaching a very important and very strong 163 resistance zone. We're going to more elaborate about all these things in our technical part. Dollar yen is posting a fresh high at 84.42 so far, just ahead of our initial target at 84.50, and another significant 85.00 level that comes into the near term focus, while dollar Swiss sinks down close to the 91 psychological support, again with some technical corrective actions seen during the European hours. Crude oil remains well supported for now on a weaker dollar, hitting levels above $88 per barrel and improving the larger picture, basically by bounce above levels close to $85 per barrel. And now brings more focus towards the upside, the boundaries of the recent range that are at 90.00 zone, $90 per barrel. From the other side, the gold suffered heavy losses yesterday on technical selling, following a repeated rejection at 1700 level. We mentioned in our yesterday's report that some corrective action could be seen in case of break through 1700 up to 1710. That is seen cupping ahead of fresh weakness, but a strong sell-off that triggered the stops below 1686 and 1684, pushed the yellow metal as low as 1660, and now opening more prospect for further weaknesses. This signals the end of the consolidative action above 1672, previous low of 5th of November, and sees more pressure towards the downside. From today's calendar, we're going to take a brief look before we move into the technical part. 9 o'clock GMT is the current account from the Eurozone. That is, according to the forecast, seeing a improvement increase in the trade surplus to 5.8 billion euros compared to 800 million euros in the month of November. And another significant, at the same time, German IFO business climate for December, that is, again, according to the forecast, expected to improve. 101.9 is the forecast compared to 101.4 in the month of November. Another significant release is at 9:30 UK's Bank of England's MPC meeting minutes. Forecast is expected unchanged from the previous voting. From Americas, housing starts and building permits are due at 13:30 GMT. November release, housing starts are expected slightly to decrease as today's forecast shows 870,000 units started in November compared to 890 units in month of October, while building permits are expected to tick higher in November, 880,000 compared to 870,000. A minor improvement and minor decrease seen in the forecast for today that should not have more significant impact in the markets in case, of course, the releases come along with the forecasts. And for wholesale sales from Canada due at the same time, 0.4% improvement seen in October's release compared to September's draw by minus 1.4%. And finally, from Americas, the last one, the crude oil, weekly crude oil inventories that are due at 15:30 GMT. Another draw of 900,000 barrels is seen forecasted today compared to build of 800,000 barrels in the previous week. Again, and not significant movements in case, of course, the releases come according to the forecast. Late in the afternoon, New Zealand's GDP for the third quarter is due at 21:45 GMT, with slight decrease in the third quarter, seen GDP dipping by 0.1% from the second quarter one that was 0.6. Today's forecast is 0.5%. And not to waste our time more, let's take a look in the markets and see the latest movements and technicals to see what we can expect in the today's trading, starting with the single currency that remains very well supported for now and continues to head higher. You still don't see, for some reason, charts. Try again. I think there is small delay in the transmission. My screen is still showing that you see the calendar. I don't know, maybe in your, okay, now you can see it. Okay, let's continue then. The strong rally in past 1 week or so from 128.76, 7th of December low, has posted another fresh high at 132.53. This was overnight's high, as the single currency remains well supported and continues to head higher. Positive tone is reinforced by break and close above psychological 132 barrier, signaling also break above approximately 3 months congestion below 132, 131.70, and opening way for a fresh bull phase that would be looking for a further stretch higher extension towards our next targets 132.82 and 133.00, with the daily structure seeing room for a possible further extension higher. As we said, 132.82 1st of May high and 133.00 round figure resistance would be seen as the next upside. The targets, we are not far from these levels in any case, as the pair already hit 132.53, with a more significant barriers seen in case of a break above 133. We can expect 135 zone to come in the near term focus. This is the weekly chart where we have approximately 50% retracement of the larger 2011 to 2012 decline from 149.38 to 120.42. 50% retracement at 134.90, as well as weekly 200 days moving average, and the previous peak, the high of year 2012 at 134.85. So basically we have quite a strong barrier resistance zone at 135. That is, of course, expected to come in focus in case we see the clearance of 133 psychological barrier. Back to the near-term structure that is showing the corrective action. This was, of course, signaled by overbought conditions and extremely overextended indicators on the hourly chart, with all indicators now pointing lower. Initial support we have at overnight's corrective lows at approximately 132.15. This is also reinforced by currently sideways moving 20 days exponential moving average ahead of 132.00 as psychological support, and 131.86 previous high, reinforced by hourly 55 days exponential moving average. Basically, we're talking about initial support at 132.20, 132.00, while larger picture shows possible, in case of a break below these levels, further stretch down towards 131. A strong support level cannot be ruled out. 131 marks also 38.2% Fibonacci retracement of the upleg from 128.76 to 132.53, and basically any stronger dips that would violate 131.43 first, the last Monday's consolidative floor, and 131.00 would signal delay in the current bulls. In case of a set deeper reversal, 131.40, 131.00 is expected. Zone is expected to contain. Otherwise, the bulls would be sidelined in favor of some stronger corrective action. Ideally, reversal around 132 or slightly below could be seen, but in case of a break lower, we can expect stretch down to 131.25, 131.42, 121.35 previous high, and 131.00. Break of 131 would sideline the immediate bulls. British pound, again, strong bulls and a fresh extension higher that posted the fresh high this morning at 162.77 en route to very strong resistance zone at 163.00. We have previous peaks. I have to go to the weekly chart to show this. Basically, the congestion below 163.00 exists from end of April 2012 when the pair hit there and then dipped down to as low as 152.67. We can see that this is the range here, and the current rally is attempting to break above this range. We need to see the clear break and close above 163 to confirm this breakout, and this would be basically opening way for fresh bullish phase extension of the bull leg from 158.26, 11th of November low, and we'll be looking for test of the initial barrier, that is Fibonacci resistance 76.4% of the larger down descent from 167.45 2011 high down to 152.33 2012 low, standing at 163.88, and the 164, of course, as around figure resistance expected to come in focus. Any hesitation around on approach to 163.00 could signal further delay and the possible consolidative action, as both hourly and 4-hour indicators conditions are extremely overbought, especially in the 4-hour chart. Yet no any reversal signal seen on any of the charts that sees the bulls are still firmly in play and they're not showing any reversal action so far, but signal of from overbought conditions could be quite good. We can expect some corrective easing with the initial support at 162.44. This is overnight's consolidation corrective low ahead of previous highs at 162.15 and 162.00 as around the figure support that should contain any stronger dips in order to keep the immediate bullish structure in play. This is approximately 23.6% retracement, 161, 162.00, 161.90. This is also reinforced by ascending at 20 days exponential moving average. In case of stronger reversal, we might be looking for test of previous highs, 161.70 and 161.30. That is seen as also good support and should be containing in case of any deeper dips. So far, bulls are continuing to trend higher without any signal yet generated of reversal. But as said again, overbought conditions are a good signal for some corrective easing ahead of a very strong barrier at 163 zone, and of course break above 163 is to trigger a fresh leg higher, 163.88 and 164.00 seen as the next upside targets. Basically, all currencies are now boosted additionally by fundamentals. We said the possible solution for a fiscal cliff. Also, the improved rating for Greece released yesterday that are now giving a positive, a more positive tone to the euro and the sterling, and of course, counterpart dollar is now pushed lower. Dollar yen is back to strength following a brief 2 days consolidation, corrective consolidative action of last Monday's gap higher, opening a high at 84.32 with 83.60 so far seen as a base for a fresh rally that is already underway. The dips were contained by ascending 55 days exponential moving average, and the failure to fill gap resulted in fresh strength that peaked yesterday at this morning at 84.42 with renewed attempt hitting again the same level just ahead of our initial target at 84.50 and a more significant 85.00 that marks 200 days moving average on the weekly chart, and this is basically seen as the next upside target. Again, overbought conditions on both 1 and 4 hour chart could be a signal of some further consolidation, I would say, under 84.50 as failure to break above 84.50 as our initial target could result in some stronger consolidative action. As we said, 84.00 acts as initial support, reinforced by ascending 20 days for our chart moving exponential moving average, and the previous low at 83.60, low of last Monday, seen as the next support, while any break below 83.00 could signal some stronger corrective action, because we have the previous highs at 82.80 and 83.00 as a very strong support, and a break below these levels in case of any stronger reversal would delay immediate bulls in favor of some stronger corrective action. Otherwise, bullish extension through 84.50 to focus 85.00 as our initial upside target. And the dollar Swiss remains under heavy pressure. Fresh extension lower through previous low at 91.51, posted the fresh one this morning at 91.12, approaching psychological 91.00 level. Continuation of the larger bullish action from 95.11, 13th of November high, and the lower top at 93.81 with the loss of important supports at 92.39, 92.13 and 92.00, signaling an end of the 3 months consolidative range trading, I would say, that was contained at 92.00 and upside capped at 95 zone. Now break of this level signals fresh extension of the larger down move from 99.70 yearly peak of 24th of July, and focuses 91.00 as initial support ahead of 90.41, that is a low of 1st of May, and 90.00 3rd of April 2012. Also psychological supports, we have them here, 90.41 and then 90.00 with another one 90.89.34 seen on a break below. This is low from February 2012. Basically, this is the yearly low of dollar Swiss coming in the near-term focus. As we said, the overall picture, overall outlook is firmly bearish and sees potential for more negative movements. Overextended conditions with RSI on the hourly chart now emerging out of oversold territory. See some corrective action preceding fresh weakness. Initial resistance is the previous low at 91.51, and then we have the yesterday's peak at 91.84. While the stronger resistance lies at 92.00. This is previous support and psychological barrier, and it's reinforced by 38.2% retracement of the down leg from 93.81 to 91.12, close to it. It's 92.15, 38.2% retracement, and then a 92.30.40 zone where we have dynamic resistance, 55 days exponential moving average, and the previous higher platform at 92.40, close to 50% retracement of the entire down leg. Break above 92.40, I would say at this point is seen as a trigger for a stronger corrective action and would sideline immediate bears. Otherwise, any reversal that is likely expected to be capped by initial barrier at 92.00 would be focusing previously mentioned downside targets at 90.41 and 90.00 as a continuation of bears, and the strong posture seen on the lower and the larger time frames still keeps the downside firmly in focus in the dollar Swiss near-term outlook. And gold, as we said on technical, selling yesterday, dipped as low as 1660, break below important supports at 1689 and 1684 and 1672. Is now basically tested the 1660, which is a 200 days moving average, ahead of another downside target at 76.4% Fibonacci expansion of the down leg from 1752 that is currently standing at 1654. Basically, the 200 days moving average so far offered the support as the gold bounces up to 1676 zone, mainly due to technical corrective action on oversold hourlies and the 4-hour indicators. However, the near-term studies remain aligned towards the downside and see potential for a further bearish extension as the yellow metal remains in the steady downtrend from the recent lower top at 1752, with the lower ones at 1723 and 1703. Now 1700 zone acts as a very strong resistance following yesterday's failure to clear it, where the 55 days exponential moving average capped the upside action, and the fresh weakness accelerated on the loss of 1686 and 1684, as well as losing 1672 as our key near-term support, keeping the bears firmly in play and downside in focus, as shown on the daily chart, where all indicators are in the negative territory and building up bearish momentum. Immediate focus remains at 1660 200 days moving average, and the break of which, of course, to look for test of 76.4 expansion at approximately 1655, and then 100% expansion at 1625. Any corrective action that is currently underway so far capped at 1676, with the 1684 and 1689 previous supports now acting as resistances, seen likely to be tested. However, any stronger action should not exceed the 1700 at this point. 1697 is the currently 55 days exponential moving average as the dynamic resistance, and the 1700 as psychological support and previous high that is expected to limit any stronger corrective action, while bears remain firmly in play. Only break above 1700 would signal some more correction and avert immediate downside risk. Otherwise, 1660 and the break lower remain in the near-term focus for the yellow metal. And finally, crude oil, that we said is in the corrective mode of recent low at 85.20, posted on 11th of December 2012, retracing over 61.8% retracement of the down move from 90.31 to 85.20, breaking above psychological 88 barrier and 88.36 Fibonacci is at 61.8%, hitting so far at 88 level at 88.61, keeping the near-term bulls in play as shown on the 4-hour chart, while hourly indicators are slightly descending at this point and showing signals of divergence. That could be a signal for some corrective action. Immediate support 88.25, 88.00, where is hourly 55 days exponential moving average, and Fibonacci levels seen on the latest uplift from 85.20 to 88.61, 87.81 is 23.6, with the lows at 87.67 and 87.60 seen as good support, and basically any stronger dips should be contained at approximately 87.80, 87.60 zone in order to keep immediate a bullish structure in play. A break above recent high at 88.61 to open 89.00 zone, sell around figure resistance, and the 76.4% retracement of 90.31 to 85.20 descent, with the positive tone dominating on the lower time frames, and slight improvement now seen in the daily chart as the price breaks above 88.00, which is 55 days moving average, and the momentum is above the midline, while MACD is currently sideways just around the center line, seeing potential for some stronger corrective action and probably to shift focus again towards the upper boundaries of recent range, 90.00 zone and the 90.31 recent peak posted on 3rd of December. That will open way for some stronger corrective action of the larger down leg from 100.72 to 84.05 recent low and our key near-term support. With the 90.42, of course, 38.2% retracement expected to come in the near-term focus in case we regain levels 89.00 and then 90.00. That was all from my side for today. Please, if you have any questions, you can type and submit them now to me, please. Low trading volumes, definitely, yes, and we are going to face this most likely now during the Christmas holidays. Most brokers, of course, we did the same. We warned all the traders that, especially on the days of holidays when the markets will be open, we might expect some lower volumes, and of course that would trigger possibly some wider spreads. This is the standard, I would say, procedure. Let's call it procedure. Usually during the holidays, many people stop their trades, but of course there are some heavy traders that don't miss any opportunity. And of course, you can see, if you see the sudden movements and strong movements, basically based on nothing, then it means that the low volumes are pushing lower or higher the price of the desired instrument by just a few trades being in the market. Definitely we can expect it, and you can see it now during the holidays, the times when the markets will be open, as many people do not celebrate just one day but extend it for a couple of days. Lower volumes would be seen Boxing Day and the day after, as well as beginning of the new year, until the players are back to full speed and bring the volumes again to the desired levels. Any other question, please? Silver, we had it yesterday. Let's take a look, because the gold is much lower from the recent levels, and silver also in descending mode. We are in the, let's just put the proper chart for the silver and take a look. Basically, we have lost important 32 support, dipping as low as 31, 33. 32 was also Fibonacci 50% expansion of the down leg from 34, 39, and it was initially containing the dips on Monday, with some corrective action seen yesterday, capped at 32.51 by descending 20 days exponential moving average, and now a sharp sell-off, of course, brings more focus towards the downside as silver retraces over 76.4% of the rally from 30.65 that peaked at 34.39, confirming the lower top at 34.39 as a part of the larger down move from 35.36. Now the negative tone seen in the daily chart after indicators broke below their midlines, while the near-term structure remains firmly bearish. Some consolidative corrective action seen on oversold conditions on 1-hour chart from 131.33 up to 131.78 with 32 as previous support, now acting as initial resistance, sharply declining moving averages 20 and 55 days one, with the 10 days one now on the hourly chart capping the upside. See again more potential towards the downside, although fresh momentum seen on the hourly chart could signal some stronger corrective action. In order to improve the near-term structure, we need to see a regain of minimum 32.51, that is yesterday's high, in order to avert immediate downside risk and look for some stronger retracement. Otherwise, more likely scenario would be further extension lower and possible test down of level at 30.65. This is low of 5th of November. Of course, we need to clear first the 31 as psychological support, and the 30.75, that is 200 days moving average, currently standing at this level, and then we have 130.65. Basically 130.65.75 is very strong, and this is seen as our key support. But as near-term studies are aligned towards the downside, most likely scenario would be a further extension towards and test of these levels. Break of 30.65 is to signal resumption of the larger down move from 35.36, confirm the lower top at 34.39, and possibly open levels for a test at 30.00 and then 29.11. This is the high of 13th of June 2012. Other questions, please? No more questions. Okay. Thank you for being with us. I see some new names also. I would like to welcome all newcomers, and we believe that and hope that the content of our presentation of our outlook is satisfactory for you. If there is anything that you would like to see and we don't have it currently in offer, or to change, any suggestion, any comment, we'll be glad to receive it from you. Any feedback, you can send it to the email shown below, analysis@windsorbrokers.com, windsorbrokers.ltd.com, as we design this according to your needs, and we put all the important stuff that is relevant for your day trading with instruments, of course, that are the most attractive. As said, any suggestions, any comments, any requests, please you can submit to the below the email address. We are back tomorrow morning at the same time at 8 o'clock GMT. Meantime, I wish you a nice Wednesday and very good and profitable trading. Good luck.